What's up everyone and welcome back to my channel. Today, I've got something really exciting for you. We're kicking off a brand new video series where I'll be taking a starting deposit of $100 and trying to grow it into the biggest amount possible over the course of 1 month. All the highs, all the lows, live and unfiltered. Think of it as a real-time trading challenge. Here, we'll use the stochastic indicator to identify entry points in overbought and oversold zones. The MACD will help confirm the direction of the movement, and the ADX will be used to check the trend strength before entering a trade. If you're a beginner, this set of indicators is perfect for getting started. The optimal settings for a 5-minute time frame are right here on your screen. Want to learn more about these indicators? Drop a comment below, and in one of my upcoming videos, I'll dive deeper into this topic for you. Let me say this up front, my bot is not a get-rich-quick button. It's a powerful tool that will help you analyze the market, provide real-time insights on indicators, and give entry recommendations. But if you truly want to make money using it, you'll need to put in the effort too. Here's a quick tip. If you want to confirm a trend or simply get a forecast on how things might play out, switch to a longer time frame in the bot. That's exactly why I was looking at the 15-minute time frame just now. Here's why I encourage you to analyze the market on your own while using the bot. The recommendation might say that the euro is likely to drop. And yes, it could dip slightly, markets are volatile. But the chart suggests there's a strong chance the euro will actually rise. First, we spot a confirmed uptrend with 3 strong support zones aligned on an upward slope. Next, we see sideways price movement with solid support, where the bears show weakness and fail to push the price lower. Finally, there's a potential start of further growth ahead. Just take a look at these support zones showcasing the bulls' strength. Every time the bears try to take control, the market responds with a clear, "Not today, buddy." What do you think about my decision to go long against the indicator's recommendations? Let me know in the comments, I'd love to hear your thoughts. Now let's look at the resistance zones. Sure, there are sharp pullbacks, which suggest that buyers might be hesitant to enter trades at higher prices, causing natural declines. However, the resistance levels don't seem unbreakable, especially since the second zone even shows a brief consolidation. Now, let's take a closer look at the candlestick chart and analyze the current situation in detail. Throughout the visible chart, we see strong bullish candles with full bodies, clearly showing that buyers aren't just active, they're willing to buy at relatively high prices. Despite the bears' active attempts, the price refuses to drop below the established and long-standing local minimum. Instead, it consistently bounces off that level and continues to rise. It's pointless to deny the active resistance, but as I mentioned before, calling it unbreakable isn't accurate either. The bulls are fired up and ready to push toward new highs. Let's take a look at the indicators. Everything points to the price continuing to rise. The stochastic oscillator is climbing out of the oversold zone, showing that buyers are starting to take control. At the same time, the ADX is signaling that the current trend is gaining strength, which confirms the bullish momentum. The MACD also looks very strong, it just made a bullish crossover, and the histogram flipped positive, which is one of the clearest buy signals you can get. On top of that, the price recently broke through a resistance level on the chart, which often attracts even more buyers and gives the market an extra push upward. All the indicators are aligning for a strong bullish continuation, but don't forget to manage your risk, because the market loves to surprise when you least expect it. In this case, you could consider using either a martingale strategy or hedging, depending on the situation. Let me remind you, money management is everything. Now, I'm taking this trade with my entire balance because I'm doing a challenge, and this isn't my main trading account. But in your regular trading, your trade size should never be more than 1 to 2% of your account balance. For example, if you've got $1,000 in your account, don't open trades for more than $10. Seriously, keep it small. And here's the deal, if you hit a losing streak, take a break. Step away, chill, and come back tomorrow. Trust me, this simple habit can save you thousands of dollars in the long run. If you ignore this advice, you risk going into tilt mode, where emotions take over, and that's where massive losses happen. Don't let that be you. Stay cool, follow the rules, and you'll be just fine. Why should you try our bot? Let me break it down for you. First, it gives you real-time recommendations based on indicators that update every single minute. No more hunting for data on your own, everything you need is right there. Second, it's the perfect tool whether you're a seasoned trader or just getting started. It simplifies your analysis, saves you tons of time, and the best part? It's completely free. No subscriptions, no hidden fees, just a killer deal you don't want to miss. Oh, and when you start using it, you'll get a promo code to double your deposit. For example, put in $100, and boom, you get another $100 as a bonus. Now you've got $200 to trade with. Plus, you'll get access to my exclusive VIP chat with signals and market analysis. It's a game changer. What are you waiting for? Check this out. The idea of the euro going up is totally backed up. We've got 4 support zones, all lining up perfectly on an upward trend line. This trade? It's practically guaranteed to close in profit. The setup is too solid to fail. Signals might seem like shortcuts, but relying on them alone is like following a map without understanding the terrain. Analytics, on the other hand, empowers you to interpret the market independently. When you learn to read the data, you're not just reacting, you're predicting. Trusting someone else's signals makes you dependent. Mastering analytics makes you unstoppable. Alright, we've locked in our first profit, time to move on to the next trade. The strategy for getting recommendations stays the same. First, I'll check the indicators on the main 5-minute time frame. Then, I'll switch to the 15-minute one to get a bigger picture of what's coming next. Let's switch it up and work with the Australian dollar and US dollar pair. Actually, scratch that. Let's go with the US dollar and Japanese yen pair instead. I think this one's got potential. Let's start with the 5-minute time frame. Here, we're getting a strong sell recommendation, which means the indicators are showing a high chance of the dollar dropping in value. Now, let's switch to the 15-minute time frame for a wider market view. And guess what? We're seeing the same confident sell signal here too. I'm going to set the maximum trade amount available, and once the trade is open, we'll dive straight into the analysis. But let me remind you, you don't have to do this, and honestly, I don't recommend it. Stick to trading only 1 to 2% of your deposit to avoid unnecessary losses. Play it smart, folks. So, what are we looking at here? The chart is showing a strong downward trend. Sure, there are some fluctuations, but the overall direction is clearly down. This is backed up by the current trend line, where each resistance level is consistently lower than the last. We're seeing strong resistance zones that are completely shutting down the bulls. No chance for them to take control. At the same time, the support zones don't show much strength or potential. The main risk here? Price fluctuations. Even though the overall trend points to a falling dollar, there can still be spikes that carry some risk. That's why it's crucial to pick your time frame based on a careful study of the chart first. Let's take a closer look at the candlestick chart and dive into the market details. We'll analyze the volumes and see what conclusions we can draw. The first thing that stands out? Massive bearish volumes. The bulls are almost invisible under the sheer number of red candles. If we zoom in, we notice these candles have solid bodies, with most showing no questionable wicks that might suggest weakness. They're confidently driving the price downward, crushing any attempts by the bulls to reverse the trend. Across the chart, we see strong resistance zones paired with pretty weak support. The reason? The bulls just aren't bringing enough volume to the table. While we've got a minute, let me tell you about an awesome contest our team is running here on the channel. Every week, we pick 2 winners who each get $1,000, just for leaving a single random comment. Here's how it works. Watch this video all the way to the end, subscribe to the channel, like the video, and leave one trading-related comment below. Only viewers who watch the full video qualify, and we accept just 1 comment per person. Make sure it's on topic. Comments like, "I want $1,000" won't count. Winners are chosen every week using a randomizer, and we post the results in our Telegram channel. You'll find the link in the description. Oh, and don't miss out on the valuable educational content we share there. It'll help you level up your skills and develop the mindset you need to trade professionally. Good luck, friends. Looking at this chart, you might think, wow, the price is climbing, it's gotta keep going up, right? But let me tell you, this climb? It's a trap. I'm already seeing the signs that the market is about to reverse and head straight down. Here's why I'm so confident, and why I'll still close this trade in profit, even if the price spikes up for a moment. First off, stochastic oscillator. Those lines are sitting way up in the overbought zone, practically screaming, hey, buyers, chill out, you're running out of steam. When that happens, it's only a matter of time before the price turns around and heads south. Now, take a look at the ADX. Sure, it was showing a nice uptrend earlier, but now? That momentum is dying off. It's like a runner in a marathon who sprinted too hard early on. They're slowing down, and a drop in pace is inevitable. Combine that with some crossovers popping up, and we've got a perfect storm for a reversal. But here's the kicker, the MACD at the bottom. Those green bars are shrinking, like the last puffs of air leaving a balloon. That's a huge red flag that the bullish momentum is fading fast. It's the calm before the storm, and I'm ready to ride that wave down. Now, will the price maybe spike up a little before it flips? Sure, it happens all the time. But that's no problem. This trade is all about patience. I know the reversal is coming, and when it does, I'll close in profit while others are scratching their heads wondering what just happened. Trading isn't about chasing the hype, it's about seeing what others miss. And right now, I see this market setting up for a beautiful drop. So, sit back, trust the process, and let the profits roll in. Remember this. The market doesn't reward panic, it rewards patience and precision. Every chart tells a story, and your job is to listen carefully. Even when the price seems like it's running against you, trust your analysis. Emotions might tempt you to hit that sell button too early or second-guess your strategy, but the biggest wins come to those who stay calm under pressure. The market is like a game of chess. Think 2 moves ahead, not just one. So stay sharp, trust the signals, and remember, it's not about perfection, it's about consistency. One good trade at a time. That's how you win this game. Make sure to try out this bot the next time you dive into trading. Trust me, it's absolutely worth your time and attention. You won't find another tool like this that tracks key indicators in real time and gives you recommendations on the spot. But remember, always analyze the situation yourself. This isn't a money printing button, it's just a powerful tool to help you out. If you found this helpful, don't forget to subscribe to the channel, give this video a like, and share it with your friends who are into trading. Good luck with your trading. Ninja is signing off. Peace out.